Well, gold and silver keep hitting brand new historical record all-time highs. Perhaps this is your wake-up call to consider investing. My name is Jessica Amir, a market strategist here with Moomoo. It's great to have your company. On the 20th day of January, we are whizzing through the year already. So obviously markets in the US, they're shut. So we're going to take our leads from Europe, where investors are seriously grappling with concerns that Trump's new extra tariffs could essentially erase all European earnings growth. Now, this basically means if we see no earnings growth across the year, that means share price growth could be non-existent for the broad European market. So add in the fact and sprinkle on the fact that we've got geopolitical tension rising again. Hello, that's amid what's happening in the US, Greenland, Iran, and Europe. And add in the fact that we do have the IMF now warning that major risks are building. So what are investors doing? Where they're selling out of growth stocks and taking profits, and they're throwing everything, including everything that was under the kitchen sink, into precious metals. We've been speaking about this a lot. It seems that the precious safe haven metals are continuing to push on up high, with silver and gold both hitting brand new historical record highs overnight. That said, we are seeing also, defense stocks and ETFs also hit brand new historical record all-time highs in Europe overnight. So that's something for you to consider. And this is obviously amid the growing expectation that we've been speaking about a lot about the key regions around the world drastically increasing defense spending. So that's today's wake-up call for you. We can no longer ignore gold and silver. I'm not sure if you have been. I've been banging on about them for a long time. But it seems that gold and silver prices could continue to hit new records. Maybe this is the new norm, particularly with the lay of land for 2026 being set under Trump's new 2.0 administration. So precious metals, yeah, sure, they seem poised for more upside, and broad stocks seem uncertain in no man's land. So the question is, will you invest in gold and silver? If not, why not? So this is evidenced by overnight. We saw European chip maker, the leader in Europe, ASML, their stock hitting lower levels, down again 4%. Adidas in Europe also down by a similar tune, and BMW also following in hot pursuit down to the downside. But if we think about the broad theme that is emerging, we are seeing investors take out profits from the key benchmarks. And this is going to be something that is going to be a consideration right now. But if we have a look, how much fat is there to skin off the table, I guess? Well, the European benchmark is up 11% in 6 months. A very stark contrast to what we're seeing in precious metals. Gold's up 40% in the same time. Silver, wait for it, you probably already know, silver's up about 150% in just 6 months. And adding to the upside, both of those overnight, including in those gains, we saw silver rising almost 5% overnight to $94.32 US, that brand new historical level. Gold also gaining almost 2% just in one session to 4,671 US, also a brand new historical high. So I guess it seems that my bull case of gold hitting 5,000 US dollars that I mentioned it a little while ago, maybe this seems a little bit conservative. Maybe we should be watching the 6,000 US level, particularly if geopolitical tension continues to mount. So it's not that outrageous to think about, particularly because you've got to consider the narrative. What is supporting gold at this level? Well, we do have the Fed expected to cut maybe one time. We've also got central banks globally continuing to buy more amounts of gold each month. And we also have debt to GDP concerns rising. And this is why much of the world are continuing to buy gold. Geopolitical tension, that's also rising, boosting demand for the precious safe haven metal. And last but definitely not least, investment managers and ETFs are buying gold again. And this is the grand finale, the real push, the final hurrah that typically drives gold to higher levels. And that's what's happened in previous gold cycles as well. So my 5,000 US dollar gold call, that was echoed by JP Morgan again. Citi sees specifically the $5,000 level being hit perhaps within the first couple months of this year. Jeffries has gone way out on a limb and saying specifically $6,600 an ounce for gold by the end of 2026. Wouldn't that be nice? So that brings us to the investments to add to your watch list today. Goes without saying, a key focus is obviously going to be gold and silver stocks that you should be adding to your portfolio. GOLD is perhaps one of the world's biggest ETFs that you should be watching. Gold deserves a honourable mention, not just for the key reasons that we've highlighted today, but remember this, that gold typically does tend to do well when equity markets are under pressure. But over the long term, remember this, gold has actually outperformed the Aussie share market. So if you have a position in the Aussie share market and you don't have a position in gold, ask yourself, why the hell not? I've highlighted repeatedly this dynamic in my research, and this is what makes gold one of very few assets that consistently delivered downside protection. So basically, when markets are falling, gold tends to do better. Obviously, it's packing a lot of punch given the key dynamics that I've highlighted earlier. And again, highlighting that the gold safe haven has delivered superior returns to the Aussie share market. So aside from watching gold ETFs like the one that we have highlighted, GOLD, there's plenty of other gold ETFs that you can look at. You can just search for those on Moomoo's platform. But the world's biggest gold company is Newmont. That is the world's biggest gold producer. It needs an honourable mention. It's up 94% in 6 months, while Europeans' benchmark index is up 11%. How much is the Aussie share market up? Well, it's only up 2.4% in 6 months. Isn't that amazing? So please do check out Newmont. Another stock to add to your watch list, obviously BHP. BHP, the pin-up broad commodity company, the biggest in the world. We spoke about them yesterday, and today their results, their half-year operational results are out. So they basically highlight a couple key things that are important for you to take away. If you don't want to look at BHP, fine, just take away this. So commodities demand remains pretty resilient. Copper production has actually been increased, and that's because much of the world are demanding more copper, and that's why the copper price is continuing to push up. We spoke about that plenty of late. For link backs to other articles that I've highlighted this, you can find the URLs in the description below. But BHP specifically have actually increased their copper production to 2 million tonnes, and they also are doubling down on their potash investment in Canada. And this is, of course, seen as a pretty good diversification move for BHP, considering much of the world will always be needing food, and vis-a-vis that's why we have rising demand for potash. BHP's stock themselves, they've also outperformed the Aussie share market of late. BHP is actually up 20% over the past 12 months. And analysts have got a BHP as a hold that basically reflects the iron ore market movement. We spoke about that yesterday. So for more information, refer to the URL in the description below. But BHP's results also show that broad demand perhaps is moderating in China, but BHP does believe that India is emerging as a key engine of demand. Again, we highlighted this yesterday. So what is going to really push up BHP's, I guess, commodity prices that they make most of their money from, rising steel and copper needs. And they are seeing this in India. And this creates a positive backdrop for BHP, not just for the iron ore price, but copper as well. And that means with prices rising or expected to rise in both of those key areas, copper by considerably, BHP, iron ore not as much. This means cash flow growth can continue. Just rounding all this out, also remember that we did have numbers out of China yesterday. Obviously, China is the biggest consumer of BHP's goods, and we saw China's industrial production rising more than expected. So this is basically solidifying the narrative here that China is actually growing better than expected. So specifically to call out the numbers in case you missed them. So industrial production actually rose 5.2% year on year to the December end. That's up from the prior read of 4.8%. So this was better than expected. And that growth figure, that 5.2% growth in industrial production, that was actually the fastest pace of growth that we've seen in China since September. And that basically underpins the narrative that the economy in China is growing actually stronger than expected if you do look at their manufacturing sector. Last but not least, for those that are still keen on tech stocks, US Netflix and chill giant globally, Netflix and chill giant Netflix themselves, a barometer perhaps of tech earnings will report on the 21st of January. So look out for Netflix's numbers. I guess the concern is the markets are pricing in a 7% swing in either direction, no matter what happens. So if their results beat expectations, the market is basically suggesting that their shares could push up 7%. But if we see a disappointment, a doozy result, weaker than expected numbers or weaker than expected outlook, the concern is their shares fall exactly as the futures markets are pricing a 7% move. The concern is this: Netflix is already down 7% this year at $88, basically almost where it was 12 months ago. So again, this result tonight could be really critical for the next move. But if you have a look at taking maybe a long-term view, if you are one of those people who does take advantage of pullbacks, note that on Moomoo's platform, we are seeing that the stock does have a buy rating. That's among the 35 analysts who rate the stock. Price targets you ask, well, they're ranging between $92 to $153. But of course, last but not least, we have to mention with markets on shaky ground, a disappointing result from Netflix could unsettle things, particularly in the tech front. But meanwhile, I do believe that gold and silver will probably keep on shining and punching to new records. Thanks for your company.